Good morning. My name's Ryan Littlestone from forexflow.live. Today I'm going to have a little bit of a catch up on a trade I've been in over the height of this virus volatility that we've had. One of the companies I've been in was buying the pound. I bought cable a couple of weeks ago, went from 120 all the way down to 115. That rose up. I took some profit. That hit my trailer when we had the move back down to 122 and below. But another pair I've been buying the pound in was against the euro. So I was short euro sterling, various levels up to 94.67 odd. Now I spoke about this previous that we're down towards an area now that sort of flipped the volatility spike that we've seen in the pair. If we look at the 4-hour chart, you can see the big spike that we had here where, you know, everything was going to pop. And we're back down, not quite, but more or less down to levels where we were before the big spike happened. And this is where I've been watching for whether the price gets a bit sticky into these levels. And we're seeing it getting sticky into this 87 level. Now, we've seen that level break, but we're not seeing a push below and we're not seeing it hold below that level. So it's really drawing a fairly sizable line in the sand here. So as someone who's short, I took a slice off, took some profit as we broke down into 0.88, and I've been looking for a break of 0.87 to get us down to that area you can see on the chart there, into that zone that was roughly from last year, November, December, January, around about the 86, 85s, maybe down to the 84s, mid 84s. That's what I'm looking for, but we're not getting that at the moment. So right now what I'm looking at is deciding whether I want to go for a second break of this 87 and see if we get a confirmed break and a decisive break to then take some more profit off into the low 86s. Or if we fail to do that, whether we're going to get another run up to 88 and whether I'm going to take some more off further up, just in case we start to see it creep back up and we head towards 90 again. So right now, the trade in its entirety is a bit in a mix because we're trading bigger things afoot. You know, Brexit is one of the reasons to be in a pound trade at all, especially against the euro. But Brexit's a little bit on the back burner with everything else going on. We have heard comments out from the new Brexit negotiator, David Frost, that the UK isn't going to extend, even with all this virus aggro going on, which is potentially sterling negative. But at the moment, that's all being swamped by everything else that's going on in the world. But as volatility calms down and as markets move forward away from the virus, we try to head towards some sort of normality, then we're going to see those sort of themes coming back in, the Brexit thing coming back in. But also we're going to be seeing what the central banks are going to be doing because they're going to move much faster in getting out of all this policy that they've suddenly thrown at the market. We're not going to be seeing, 6 to 8 months waiting for whether they cut QE by 10 billion. It's going to happen very quickly. We've already seen it with the repos in the US and the Fed, and we've seen it in other central banks. They're just adjusting QE and the amounts they buy much faster. So on the central bank trade, on the rate divergence trade between the Bank of England and the ECB, we're potentially going to see some faster moves if those mechanics change pretty quickly on the QE front. So for this pair, that's what I'm looking at the moment. My boundaries right now are 0.87 and 0.88. If we get below 0.87 and hold below, then we should see further downside. If we break above 0.88, then we're going to potentially see further upside. So that's a boundary to trade, and we can trade that intraday and on a shorter term basis between the edges. Buy at 87, sell at 88 if need be, keep a stock fairly tight, 20 pips above or below, and see how we do. But that's my view for Euro Sterling, and as usual, I wish you well this week.